while Mohit as CEO will come in with a detailed plan, uh, the expectation I'd set is that it is not going to be a quick turnaround. There are a number of things that have to be put in place to be able to gain significant margins to get back to the industry peers. And we were off by 400 basis points on a normalized basis. Right now, it's due to some one-offs, etc., which is why it's higher. So we've got to gain that 400 basis points. I would expect it to be a 3-year turnaround. The Mohit may come in and say it's going to be slightly faster or slightly slower, but that's the path that I would expect it to be.
Um, for Rajesh, on the farm issue, the EBIT margins are lower on a year-to-year basis and a quarter-to-quarter basis. You mentioned about the fact that they are one of new launch expenses and others have and maybe advertising costs. Is that the only reason which is making the margin subdued?
Yeah, so Sajid, want to clarify. So we report a farm standalone margin, and we are also showing a core tractor margin as you saw
Yeah.
in the deck. If you look at the core tractor margin, so I just want to kind of focus on that, because now in the farm standalone we've added a few other business lines which used to be in others earlier. Example, we've added Powerol, we've added Solarize business which has moved into the farm equipment sector. So when you look at the farm standalone margin, it's a function of different things, including the investments we're making in farm machinery, which is the non-tractor business to drive growth. And hence we are showing the core tractor margin along with the farm standalone margin. So when you look at the core tractor margin and you look at Q2, I'm just doing sequential right now, Q1 to Q2, where we've dropped 1% from the previous quarter. Previous quarter was 18.5 and right now we are 17.5. There are three key reasons, if I were to put it that way. The first one is obviously operating leverage, because this is a non-peak quarter by way of volume. Quarter one, as you know, May, June is a season like the festival season is. This year in quarter two, there was no festival season. So you are seeing an effect of operating leverage between Q1 and Q2. Actually, 1% can be just explained by operating leverage. That being said, because we've gone through a significant launch process for Oja, Swaraj Target, and for the whole new look Swaraj with new features, which is Naya Swaraj. The Dhoni campaign on the one side and the Oja campaign and the whole Cape Town global launch. We are kind of calling out 0.9% as a one time towards the launch of these. So in a way, if you were to kind of compare Q1 to Q2, there's operating leverage, which we're not even counting for, and explaining the 1% drop through one times.
For Manoj, 2,200 crores of capex. That's what you have done for half year. What are you in target for the full year capex in the same region? And your dividends from subsidiaries and joint ventures and associates, 1,400 odd crores. If you can give us a breakup on that.
So, in terms of the capex, I think if you look at the plan which we had outlined, which is the F22 to 24 plan, we are largely following that path, and so the glide path around that is going to be the same. I think your second question was on dividends. So, the biggest proportion of dividends is two companies, which is Tech Mahindra and Mahindra Finance. I think those are the two big components. The others are coming from a lot of unlisted companies also, because I think what has happened is with the turnaround in their businesses, I think, and cash generation there. So we are actually encouraging all our subsidiaries to pay us dividends. So dividends, I think, as a trend, are going up every year, because that's a corporate initiative which we are doing to make sure that there is capital discipline across the group.
And more importantly, driven by performance of the businesses. Right? So business like MHEL, Mahindra Heavy Engines, has a dividend of 95 crores. And overall dividends are up 31% from last year, despite Techem being lower. And Techem being obviously a significant contributor to dividends. So what you're seeing is the impact of the overall group in terms of its turnaround, the growth gem starting to contribute more. And that's really helping us drive this.
Two clarifications, Rajesh. You mentioned the fact that we were looking at low single digit growth in farm, and now it's going to be flat. What is the reason why you have changed that outlook? And secondly, you mentioned briefly about the steel shortage issue. If you can clarify on that part of.
Yeah. Sajid, so I don't know if you were here the last quarter when we had this, and that time the rains were just good and it was pouring away through July, and everyone said, "Are you not moving your projections upward?" And if you go back to your notes,
But you always
you'll
maintain
realize
that monsoons have no relations to growth, right?
exactly. I also said that I've been long enough in the tractor industry to not make these guesses. So now that we've gone through August and we've gone to September and we're seeing what's happening now, we're not making a big shift from where we said. So it's basically 2 to 3 basis points, 2 to 3 percentage point shift, which may have been low single digits of 3, we're saying is likely to be flat. But again, I would say you never know in the tractor industry. So you never know what can lead to a positive sentiment. So these are all our best guesstimates as we see the market at each stage. I would may have a different estimate 5 days later because we have 3 big days of peak sale left, which is the Dhanteras to Diwali. So maybe it's going to be a different number 1 week later. Yeah. So there were some elements of steel specifically going into products of ours. So we use a different quality of steel because we have safety norm 5-star rating on NCAP. We have a different quality of steel that goes into a lot of our products, and that version or that specification of steel was very short through the last 2 months. One of our key suppliers had a breakdown in that steel supply, which as they recovered their plant production, we started getting something at the end of September, but that all got consumed in September. So we opened October with no inventory, and then again it got refilled at end of October. So basically we've seen, like I said, month-end skews because we didn't get steel availability consistently through the month. But as you can see from the numbers, we caught up very well.